The $200 trillion market no one regulates. Inside the shadow banking system, banks are supposed to be safe. You put money in, they keep it safe. You take money out. But what if I told you there's a whole other banking system, one that's in the shadows? It moves over $200 trillion, but it's not really watched. It's barely controlled. And if it breaks, we all feel it. What's the story? We all know what a bank is. You open an account, you get a card, maybe even a loan. But shadow banks? They don't have branches. They don't take your paycheck. And they don't follow the same rules. Still, they lend money. They move cash. They invest in big things. And here's the scary part. Shadow banks helped cause the big crash in 2008. And today, they're even bigger.
Jesse, if big banks didn't cause the financial crisis, at least according to Hillary Clinton, who does she say is responsible?
She likes to talk about the shadow banking system, and it's a little bit difficult to gauge exactly what she means by that, but she has certainly named Lehman Brothers and AIG as being more sort of primarily responsible for the crisis than the big banks, which she equates in her recent speeches with the idea of traditional banking.
How did this start? A long time ago, banks had to follow lots of rules. They needed money in the vault to back up every loan. But big companies found a shortcut. Why follow banking rules when you can just not be a bank? So they created new tools. Hedge funds, private equity firms, money market funds, REITs, real estate funds. These groups acted like banks, but in the shadows. No deposit insurance, no strict rules, no regular checkups. They could take big risks and make big money. What went wrong? In the early 2000s, shadow banks grew fast. They gave out money for homes, even to people who couldn't afford them. Then they bundled those risky loans into big packages called mortgage-backed securities and sold them to investors all over the world. Everyone thought it was safe, but it wasn't. In 2008, the whole system broke. People lost homes, jobs vanished, banks collapsed. One shadow bank, Lehman Brothers, held too many bad loans. It went bankrupt. The stock market crashed. Governments had to step in with trillions of dollars.
September 15th, 2008, Lehman Brothers filed for bankruptcy. There was nowhere for that bank to turn, smashing the theorem too big to fail. Well, fast forward 10 years later, the U.S. economy is robust, unemployment is low, and the stock market is hitting record after record.
The fallout. After 2008, the government made new rules for regular banks. But shadow banks, they kept growing. Now they're even bigger. Today, giant companies like BlackRock, Citadel, and Apollo control billions, sometimes trillions, through shadow banking tools. And guess what? They're connected to your life, your mortgage, your student loan, your rent, even your retirement account. You might not see them, but they're there, behind the scenes, moving your money. And because they aren't banks, they don't get the same safety checks. If things go bad again, it could happen fast and hit hard. What this means? Shadow banking sounds spooky, but it's real, and it's huge. It helps money move quickly. It helps big businesses grow. But it can also hide risk until it's too late. There's over $200 trillion in this shadow system. That's more than all the money in every US bank combined. And if it crashes, it won't just hit billionaires. It'll hit you and me and everyone else. That's the scary truth of shadow banking. Like this story? Then stick around. We've got more wild money mysteries, secret tech stories, and government loopholes coming up. subscribe, hit the bell, and let's keep pulling back the curtain together.